Welcome back. Oil prices extending yesterday's big rally, trading well above $53 a barrel right now. The International Energy Agency says this morning that the oil market will stabilize should oil producers stick to their agreement to cut production. Joining us right now is the editor of the Schork report, Schork. Stephen, good to see you.
Great to be back, Maria.
So what's your sense of what's going on here? Oil prices back above $53 a barrel. Does this rally keep on going?
At this point, I wouldn't step in front of it. This rally and the decision, Maria, by OPEC, and then yesterday's decision, or I should say the weekend's decision by the NOPEC, that is the oil producers in cahoots with OPEC, is great news for a number of people. It's great news for North American, especially U.S. shale drillers. It's great news for Elon Musk. It's great news for Wall Street at this point. Not so great news for the consumer at the pump. So let's break this down, Maria. So first and foremost, we have U.S. shale production. So when it's all said and done, U.S. producers will have pulled off 600,000 barrels a day of oil production this year relative to last year. Now this year, at the time, OPEC has increased its production by 1.4 million barrels a day. Russia has increased its production by 600,000 barrels a day. So this year, while U.S. producers were taking 600 off the market, OPEC and Russia were putting 2 million onto the market. So what we have in essence with the cuts announced by OPEC and the NOPEC country is basically bringing us back to where we were at this point last year. So that is to say, even if we see full compliance come January, OPEC is still going to be producing 300,000 barrels a day more oil today than it was last year. So at this point, we're going on a lot of assumptions here, Maria. We are assuming 100% compliance on the part of these announced cuts. That's never happened before. We're more realistically looking at 70%, and that's even being rather generous. So even with that said, what we're looking at and the assumptions that we're making are, first and foremost, we're not going to see a demand response. I think that's kind of odd. Of course we're going to see a demand response because with the introduction of substitutes, thank you, Elon Musk, the price elasticity of demand has completely changed at this point. So as oil and as gasoline prices increase this summer, demand will begin to suffer on these rising prices. That is to say, also, right, on a global scale, we have the rally in the dollar. The dollar in oil prices move in the inverse relationship with the dollar being the world's invoicing currency. So that's also a major headwind. Now, on the supply side, as I said, U.S. producers have taken 600,000 barrels off of the market. What we've seen coming in, even before the OPEC announcements, oil rig counts up 8 out of every 9 weeks since June. Yeah. U.S. production since the summer rising 0.2% week in, week out. We have producers that have sold forward at a 6-year high. That is, they've sold the NYMEX forward 6-year high. Yeah. That means more production is coming to the market.
So what you're saying, and I think, Dagan, this is what we've been talking about in terms of oil. When it gets to a certain price, it actually impacts demand. So the higher oil price gets, maybe that cuts off the economic traction that we've been seeing in terms of growth.
Right. And, Stephen, don't the producers, the countries, worry about permanent demand destruction? So that's why, won't they manage the price to keep it relatively low because they don't want that consumer of fossil fuels to go away forever?
That's exactly right, Dagan. So 10 years ago, we were talking about the fallacy of peak oil supply. Today we are talking about peak oil demand, and that's why this is certainly great news for the Elon Musk, because the genie is out of the bottle. So it's not just the electric motors, it's not just the hybrid motors, it's also things like driverless technology, which is certainly going to continue to eat into the demand. So once you begin to see oil prices get up into that 60, maybe if it does get over 60, this from a long-term standpoint does not play well into the hands of these oil-producing countries.
Yeah, but we've got Bob Nardelli here, and he's a car guy, basically, former CEO of Chrysler. And Bob, we tried the electric car thing, the autonomous vehicle thing. Yeah. Is it going to gain traction with consumers? When all is said and done, are they going to buy it?
Well, I think a couple of things, Stephen. You mentioned with oil prices going up, you're right, the price of fuel at the pump Last year, record for retail miles driven. What will happen is people will start buying smaller cars, more energy efficient cars, which will hurt the auto industry because the highest margin is on the trucks and the SUVs, which have been over the top. I think from an electric vehicle standpoint, Maria, less than 1% today is electric vehicles out there. Less than 1%. So it might catch on, but I don't think it's going to be a vertical curve going out there.
Well, you all are explaining the old trading adage right from the trading pit, Stephen Schork. Nothing cures high prices like high prices. But that being said, when you look at the correlation to the U.S. stock market right now, I mean, oil and stocks seem to be moving in lockstep. What happens to stock prices if we start to see a turnaround in oil?
Well, you know, it's interesting because we always make this assumption, and I think this is one of the biggest fallacies that I've fought against for the past 2 years on these low oil prices, that we were saying this is generally good for the economy in general. Now, it's good for the consumer from the standpoint that I like paying $2 at the pump better than $3, but my cost of my incomes haven't gone up, and my cost of my incomes haven't gone up because the economy has been rather stagnant. So this assumption that low oil prices is good for the economy kind of has it backwards. A strong economy supports oil prices. Commodity prices don't drive economic growth. Economic growth drives oil prices, drives all commodity prices. So it's not a coincidence that over the past 2 years, we have not seen just a bear market in oil. We've seen it in all the major industrial economies. So that said, if you tell me that oil prices are strong and firming, and so are copper prices, lumber prices, steel rebar, then this is generally a good sign for the economy. And then, of course, the correlation is, yes, this should be generally good news for companies, which should be good news for the stock market.
All right, we got to jump, but I guess so that's the thesis. I mean, if $53 oil is telling us that things are getting better in the economy, Sandra, then maybe that doesn't mean stocks go down. I don't know.
No, because he's actually...
It's one way of looking at it, absolutely.
Okay, all right.
He said it best. You have final words, Stephen Schork.
Sandra, thank you. Stephen, good to see you, sir. Thank you.
Great to be back. Thank you.
We'll see you soon. Stephen Schork there.